Hey guys, Max here, and this is your daily market update for yesterday, the 25th of January. It was once again a volatile day for the markets. We saw losses and gains and finally losses again, and there's quite a lot to talk about, along with some Elon Musk antics and a couple other stories, so let's just get right into it. Now, what happened in the markets? Well, we had a situation that was eerily similar to the day before. As the day started, pretty much all American equities were down. The Nasdaq fell more than the SPY, which fell more than the Dow, as you would expect. The S&P 500 was actually down by almost 3% at one point of the day, the Nasdaq fell by over 3% by midday, and the Dow was down by just over 1%. Just like the day before though, the markets rebounded, they started to rise after a few hours, and it looked like they were back on track to finish up on the day just like they did the day before, but that was until the rise ran out of momentum and the fall continued. By the end of the day, the Dow finished pretty much exactly where it started, the S&P 500 closed down 1%, and the Nasdaq closed really poorly, seeing a 2.3% decline for the day. Why was the day volatile again? Well, a big part of it is for the same reasons that the day was volatile before. The usual fears surrounding the Fed and what they're going to do and say on Wednesday, which is now today. There are also still loads of fears going around about the situation in Ukraine. Now, there was no real major catalyst. There is still no invasion in Ukraine, but tensions are being raised, sanctions are looking more likely by the day, and so investors are just starting to get worried again. We had some earnings reports that obviously we knew we were going to be getting, the big one being Microsoft's, and some were good, some were bad. Microsoft had strong earnings themselves, but they saw a major slowdown on the growth of their cloud computing part of the business, which is pretty much the most profitable business in the world right now, as long as you have the economies of scale to compete. This slowdown is bad for Microsoft. It's already a large part of their business, and this slowdown will almost certainly translate into lower future cash flows, so the stock price fell. Microsoft Azure, as it's known, which is that cloud computing part of the business, well, it used to grow its revenues by about 50% year over year, so it was looking like it could be almost exponential growth and a huge source of cash for Microsoft in the future. But this recent report shows that it has already decreased to almost 40%, and it looks like it's just going to keep decreasing from there. As a result, Microsoft closed down over 2.6% for the day. Now, IBM International Business Machines had good earnings and the stock rose 5%. American Express had really good earnings as well, and their stock rose almost 9% because they're also forecasting good earnings in the future. General Electric had poor results and fell 6%. Nvidia dropped 4.5% on that news about the ARM acquisition being dead in the water that we spoke about yesterday. So in short, some companies did well, some did poorly, but the indexes on the whole fell for the most part. Now, this isn't really anything about corporate earnings, but the International Monetary Fund came out and lowered their growth expectations for 2022 as well, on weaker prospects in both the US and China, and stronger prospects of high inflation all around the world that is not subsiding. I strongly suspect that over the coming months, we're going to see pretty much every financial institution in the world adjust their growth forecasts as it becomes clear what sort of environment we're heading into. Now, the really important takeaway from all this, though, is the volatility that we're still seeing. Trillion-dollar companies really shouldn't be changing in value as much as they are, and on such little pieces of news. We already know that the further detached the stock market gets from the real economy, the more it becomes based on leverage, margin, derivatives, and speculation, the more likely we are to see a market correction, a crash, or a recession, and markets have just been very irrational for months now, something that we've all spoken about at lengths. Foreign exchange markets didn't see any major shifts. Pretty much every currency remained constant, small rises and falls of 0.1 or 0.2% as is usual. Bond yields did advance across the board, though not by a huge amount. The 10-year Treasury moved up by 1 basis point, the British 10-year bond moved up by 4 basis points as well. Oil did move up a fair amount, with WTI crude oil moving up 2.5%, which is on top of the already sky-high price, meaning per barrel it's now sitting above $85. This is, of course, not great for inflation. Everything uses oil, everything has to be transported from one place to another. Gas prices matter, but according to the transitory crowd, oil was supposed to decline from 2021 forever basically, and that just hasn't happened at all. Gold had a slight rise, up 0.3%, and it's now sitting above $1,850 an ounce, which is nice to see it reacting to the negative news with inflation and the markets. Now, in the crypto markets, there was some very slight bearish action. Bitcoin and Ethereum behaved just like US equities did, with a dip followed by a rally, though crypto on the whole actually finished pretty much exactly where it started, or even a little bit up. At the time of me making this video right now, Bitcoin is sitting above $36,000, Ethereum is sitting above $2,400. Lots of the altcoins performed a fair bit worse though, Luna, Cardano and the like, but Dogecoin of course bucked the trend and saw a little pump, rising just 5% for the day after Elon Musk took to Twitter once more and pumped the coin as he just so loves to do. What's the story behind it all? Well, as Bitcoin and crypto have been getting hammered, there's become a running joke going around that all these crypto fanboys are going to have to get jobs at McDonald's as they're suddenly broke again. Even McDonald's real Twitter account has been joining in on the joke, inviting crypto bros to come and interview. El Salvador's president, who has been gambling his country's dwindling dollars on Bitcoin, has been a target of the joke as well, though he's taken it in good stride, despite his massive failings. Now, all this McDonald's and crypto talk inspired Elon to tell McDonald's that if they start accepting Dogecoin in their restaurants, he'll be happy to eat a Happy Meal live on TV. This is literally nothing. Nothing will come of this, almost certainly, although there is a very small chance that it leads to some actual use cases for Dogecoin. The chances of that are literally minuscule. The price was pumped purely because people are expecting it to pump because Elon tweeted about it, so people went out and bought it, and that caused the price to pump. This is pure speculation, it's a whole load of nothing, but that never stopped the crypto markets before, so it shouldn't stop them today, and it didn't. Now, to make matters even worse, McDonald's then replied to Elon and said that they'll accept Dogecoin if Tesla accepts Grimace coin. I obviously didn't think that was a real thing, so thought nothing of it. It's just a bit of banter from a brand account. But no, Grimace coin is real, at least it is now, as some people have gone around and made it the second they saw that tweet. There are a few different iterations, but they're all tiny microcap cryptos that have no purpose, no use case, no utility, nothing at all. But this tweet, of course, sent some of them skyrocketing up, with one Grimace coin rising 285,000% in a matter of minutes before crashing right back down after the owner started to sell. There were a few other attempts to create a Grimace coin as well. One reached a market cap of over $1 million, one reached a market cap of around $800,000, and one didn't go so well at all, only reaching a market cap of $1,400. The mere fact that this is still a thing, these ridiculous grifts to try and get money from nothing, is just insane, and it's 100% one of the identifying features of a bubble. Of course, that bubble is already deflating, but there are still some fools out there willing to buy some absolute crap for seemingly no reason at all. Now, this is not normal, it's not rational, and it's not efficient, and it isn't going to last. What is going on in the world of business then? Well, in Japan, stocks are seeing some more downwards momentum, keeping American equities company. Both the Nikkei and the Topics are now down more than 10%, which means they're both in correction territory. A large amount of this is for the same reasons as we're seeing in the US. Fears over what the Fed's tightening could do to capital markets and the economy as a whole, along with fears over a conflict in Ukraine as well. Japan just aligned themselves with NATO in that whole Ukraine situation as well, saying that they will respond with NATO if Ukraine is invaded, so they're getting involved as well. The other reason for Japanese equity declines is really just poor economic data from the country. Their economy isn't looking too strong, it's not growing, as is all too common in Japan, and there are fears around the Omicron variant and what that might do to spending and growth as well. In short, it can be easy to get overwhelmed by the dips we're seeing in US markets, but the US doesn't exist in a vacuum, and plenty of other markets are moving in that same direction as well. In Kazakhstan, of course, the other month we had all that unrest, and then CTSO stepped in and helped the Kazakh government quell all the protests, and after the violence ended, of course, a bunch of people sadly died, but news from Kazakhstan has pretty much dried up as the situation seems to be resolved, with the government remaining in power and control. What we did see during that crisis was thousands of Bitcoin miners who had fled China. They all saw their operations shut down, and this coincided with a crash in the crypto markets. What has now just emerged though is that this was a targeted move by the Kazakh government to shut down crypto miners as the unrest was starting to emerge. It is possible that we see more action like this in the future. The government is struggling with not enough power, and miners use up a lot of entirely unnecessary power. Some people are a little bit worried about this. Less miners means less validators, and it can compromise the integrity of crypto networks, but to be honest, this shouldn't really be a major issue in the future, although it could affect sentiment in the crypto markets. Now, in inflation news, there have been huge increases in wages for financial analysts this last year, as competition between firms to hire the right talent is really strong. We've seen pretty much every firm increase their base salaries, sometimes by as much as 50%, and then they all increase their bonuses as well. Now, this is a slightly worrying trend as it's sticky inflation. Inflation that is not likely to go down easily, and were it limited to just the finance industry, it might not be a huge problem. But of course, this wage inflation is being seen all over. It's just strongest in the finance sector. Now, we got new news from Bank of America and Deutsche Bank about how they plan to attract new talent. Bank of America is going to be paying out an extra $1 billion in bonuses eligible to employees who earn under $500,000 a year, which means 97% of employees can get it. Most of this will be in the form of stock options and the like, but this is compensation, and it's just going to make it more difficult for other firms to hire the talent that they need. It's a good time to be in that industry, at least for the next few months before everything goes tits up. Deutsche Bank as well now is considering increasing the bonuses they give out by 15%. The same trend is being seen across the pond in Europe. It really is interesting to see this play out in real time, and while it probably isn't going to last too long, as the macro climate is changing rapidly and not for the better, some people will at least get some hefty bonuses before they are unceremoniously fired from their jobs. More inflation is of course coming, and this time with wheat prices that are soaring as a result of this chaos in Ukraine. Grain shipments in the future are looking a little bit uncertain, and so demand for grain is increasing as people and businesses think about stocking up. We can add wheat to one of many things that are rising in prices, with no real way to feasibly counteract what we're seeing happen right now. Now, the ex-head of Goldman Sachs is creating and has just launched a new crypto and stocks investing app, and to that I say you are years too late. This market is already hugely saturated, and we are sitting right at the end of the greatest bull market of all time, meaning the number of people investing in stocks and crypto is going to be decreasing from here on out. That's one of the reasons that Robinhood and Coinbase have seen their share prices plummet so much recently. Of course, this guy probably didn't plan to be so late to the party, but he is. And you have to wonder what he plans to do to stay competitive and drive adoption of his app when there are already so many identical options and the market is just going to be shrinking from here on out. This is basically akin to starting a .com company right at the end of 2000. Now, the United Arab Emirates, the country which contains states like Dubai and Abu Dhabi, is opening up a casino as they start to allow gambling for the first time. Gambling is, of course, against Islam, it's haram or whatever it is, and so like alcohol, it has always been frowned upon, but the country is oil rich and it's 100% aware of the fact that the wealth will not last forever, so they've been progressing very quickly, drawing millions of tourists and trying to attract high value industries as well, and gambling is the perfect industry for this type of stuff. Just take a look at the amounts of wealth in places like Las Vegas and Macau, and then consider the fact that almost everyone losing money in those places are foreigners who you probably don't care about anyway. This really should have been something that the UAE adopted a decade ago, but it's better late than never. Now, Korea's richest person has now lost half of his wealth over the last year, as the share price of his company has been declining consistently for 6 months now. News has just emerged that he might have illegally evaded almost $1 billion worth of tax, and the reputation of his firm is falling with that news. Finally, over in the UK, our PM is now being investigated by the police for illegal parties during lockdowns. My position on this hasn't really changed, to be honest. I'm 95% sure that this probe will amount to nothing and that scandals will keep popping up, but when Boris has a majority of 76 seats, it doesn't really matter. As long as he isn't present during the next election, as long as he stands down, basically all will be forgotten, as there will be someone else canvassing for the Tories. That isn't necessarily what I want to happen, but it is what I think is going to happen. Now that is it for the day. I'm hoping to get a Coinbase video out tomorrow, probably a few hours after the daily update. Of course, we are hearing from the Fed today, so tomorrow's daily update will probably be a really big one and quite an important one as well, so make sure to catch that. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.